Hello traders, good day to you all. This is Tom Willis from Opteck. This is the daily market review for the current market status. Today it is the 4th of December 2013, and as I said, there is a lot of expectation in the market for today's announcements. We've got an enormous amount of information expected to develop a burst on the market. Now, during the night time, we saw that the Asian market lost some strength. The Nikkei dropped down 2.2%, which is the first drop down that it formed after the long and strong movement that it developed higher and higher and higher, implying that the Japanese yen should lose strength during that period. And since last night, it gained a bit of strength because of the weakness that we saw in the Asian markets formation. According to the expectation, as I said yesterday, I'm expecting the gold to lose strength, the dollar index to gain strength, and we will analyze them today, approaching the so important situation that we've got coming up in an hour and 15 from now, and forward than that, 1:30 again, and at 3 o'clock. Very, very important announcements, an enormous amount of information that will deliver confidence or lack of confidence and will change the course of the chart. That's exactly what we're looking for. Strong liquidized movements, and that will happen today. Why am I saying that? Usually, if we've got an announcement here, an announcement there, then we know that the market may deliver the same actual indication as the forecast. For those of you who watched the webinar, I've talked about the forecast and I've talked about the actual number. In this case, for example, let's say that this was a red announcement. It was yellow, but let's say that that's a red announcement. So we had a forecast of 0.1%, and the actual number, the actual figure that came out was 0.1%, so no change occurred, meaning that analysts predicted a specific indication, and eventually the same indication was published. So in this case, I'm not expecting this announcement to deliver a lot of liquidity. Again, paying attention that assuming that this is a red announcement, not a yellow announcement. But because of the variety of announcements that we've got over here, and it's not only that we've got an announcement that was delayed, the new home sales that was delayed because of the shutdown that we had last month, if I'm not mistaken, or before that. Can't really remember what was the exact date. So we've got an enormous amount of movement expected on the charts, and that will be a golden opportunity for us to use this liquidity for our advantage. What am I doing using this kind of potential? First of all, I'm paying attention to the Japanese yen equation, the indication regarding strength and weakness. Through that platform, through that image, I can immediately recognize potential movements that occur on the charts. Usually what traders are doing, they concentrate on a specific asset. Usually it'll be the euro versus the US dollar. That is a mistake. Not always the euro versus the US dollar will deliver long, strong movements. And not always, if we've got an announcement on the US dollar or the Canadian dollar, just as we've got today, not always that will be the assets that I'd like to trade on. Maybe the liquidity that they'll deliver to the market will change the curse, will change the already going relationship between other currencies, and I may find the potential over there using the idea of correlation. I will go over that during the analysis on the charts. That's first we'll see what we've got during the entire trading day. Okay, so beside this specific group, we've got nothing over here. But again, usually what happens, and that's something that I got to show you. Let's say that we're looking at a chart, and let's say that that's just for the example, the gold. So just to give you small indication, what we had this morning, if I can remember, we had something like a downtrend movement, a bit of an uptrend, a strong downtrend movement, and since then we were bouncing backward and forward. We've crossed this area, and right now we're fluctuating around this level. It should be something like 1,200 and something. It's not really important. The important issue is that the liquidity that will be driven from the announcement will develop this chart according to cross beyond specific areas. If the market will cross the trend line, dropping down, that will be an indication for an uptrend. If the market will cross the trend line below the entire pattern, that will be an indication for a downtrend. Now, as traders in the binary option market, we can't predict, unfortunately, we can't predict how long this movement will move. Maybe it can climb higher very fast, it can drop down and retest the line. In order for us to rejoin movements that already began the expression of liquidity toward a specific direction, we need to have a pullback, we need to have an indication on our indicators. So on one hand, we've got a potential to see large amount of liquidity, but on the other, I encourage you to use the liquidity if you've got a good potential on the one touch instrument. But if you'd like to use the high and low, wait a bit. Wait several minutes after the announcement, see what's going on, how the market is reacting. I remind you, it won't be a specific spike of an announcement. We've got a variety of announcements coming up, 15-minute between these two announcements and an hour and a half. So I wouldn't trade the non-farm employment change announcement. I would wait for the trade balance, because traders that will invest in this indication may change their opinion once this announcement will come up. And this, again, between the 1:30 and 3, we've got 1 hour and a half between them, so we've got enough time to see a pullback on the chart and to follow that specific movement. But in this case, we may have a good announcement over here and a bad announcement over here, so that will change the course, and we can't trade lower than 30 minutes. Again, you can, but I'm not advising you to. So we've got a good potential, nice potential for liquidity. We had liquidity since this morning, and we had several good trades. A put option that I've stated for the gold and for the silver, a call option for the oil, and the pound versus the US dollar was a good downtrend movement, and other good trades as well. Let's actually go to the chart and begin to analyze the potential that we've got for today. So first of all, let's go to the Japanese yen indication. Looking at the Japanese yen, we can say that the Swiss franc is the strongest currency at the moment. Let me check the time frames. Everything is set. Yeah. So the Swiss franc is the strongest currency at the moment in the market. We can say that the Japanese yen is second in line. As I said, it gained strength out of the using the expression of the weakness that we had in the Asian market during nighttime. Swiss franc, after that the Japanese yen, after that the euro and the dollar, and lower than that it's the pound, Canadian dollar, and the weakest is the Australian dollar. So if you'd like to use the 60-second strategy, you can use the Australian dollar in front of the Swiss franc, but you can't do that on the on-demand. So to use the on-demand, we need to join the Australian dollar in front of the Japanese yen, which is the best currency pair to use the 60-second strategy. The RSI at the moment is fluctuating around the 50 level. Once it'll continue its downtrend movement, then every pullback will be a good situation to put to buy a put option for a downtrend movement. You can see how many good trades we had already. And looking at the trades, I can tell you that 5-minute trades and even 10-minute trades are the preferable time frame. We had something like a losing trade or 2 losing trades over here, but we had a bunch of good potential trades all along this downtrend movement. That was a great indication for us. Beside that, I can say that generally the Japanese yen is stronger. We can see that the dollar versus Japanese yen, it moved beyond this corrective pattern very nicely. At the moment, it's forming something like a corrective pattern, not a very strong and liquidized movement like this strong and liquidized movement that we already had. So I would leave it alone because it seems like it's forming an A pattern, a B pattern, and a C pattern expected to climb up after that. So at the moment, I wouldn't trade the dollar versus Japanese yen. And beside that, it's approximately 50, meaning that they approximately express the same strength and weakness. That is it for the indication. Let's actually go to see what we've got on the charts, on demand instruments. And I do want to check the dollar index, see what is the expectation according to the 8-wave analysis. Australian dollar, US dollar, good potential trade, stochastic at the top. Maybe we'll receive a cross. We've reached the lines on the moving average. Good potential for divergence, and the RSI is way below. Trade will be in two pulses. I will definitely leave it as this. 5-minute chart will help me to locate a better trend line. But as you can see, this is an expression of fear from an announcement. Okay, we have the liquidized movement lower. Since this moment and beyond, the market formed a choppy and a very condensed movement. Very, very slow and indecisive movement. And we can read this movement as expectation for an announcement. Now, again, the market will drop down below this trend line. That will be a great trade according to our strategy. No need to wait for the announcements, wait for something to occur. We've got an indication that what really is important for us. A cross beyond the trend line will be an indication for a downtrend on a 15-minute chart. And it seems like a good trade for a put option. The Australian dollar versus Japanese yen at the moment, again, it's expressing an additional weakness, potential for additional weakness, which will help the dollar to gain strength, more strength in front of the Australian dollar on this chart. But that will be a better probability because the indicators are implying that we've got a good probability over here. Euro versus the Australian dollar, approximately the same perspective. We said that the euro and the US dollar are presenting the same strength. At the moment, we can see that the market climbed up in an impulse movement, dropped down in a corrective pattern. The stochastic dropped down to the exhaustion level as well. RSI way at the potential for an uptrend movement. A great potential over here and an easier trend line to draw above the corrective pattern. A cross beyond this trend line will indicate that the market is ready, digested the entire corrective pattern, and is ready to move beyond and to climb higher, and that will be a good catch for continuance of an uptrend. Again, the Australian dollar, Japanese yen, I wouldn't trade on that because according to the formation, it seems like the stochastic. You know what? Let me see the 5-minute chart. Maybe I can help with that one. Basically, it looks like a good completion of a corrective pattern. On a 15-minute chart, we can see that the stochastic did not climb up to the exhaustion level, but that's logical because the Japanese yen is stronger than the euro and than the US dollar. And this is why it's harder for the Japanese yen to climb beyond and to give us an accurate exhaustion level. But again, a drop down below this trend line will indicate another good potential for this chart as well. And I've stated that this is a good chart to trade on a 1-minute strategy, on a 60-second strategy. Let's move forward. Nothing over here, nothing over here. Over here we've got good potential, but it's not strong enough. As I said, the pound versus US dollar was a good potential for a downtrend, but at the moment it seems like we're retesting the trend line. I can't find any logic for this specific movement yet. We will need to wait to the announcement to see a larger difference between the pound and the US dollar. The euro versus the Canadian dollar is approaching good potential as well. We've received a 5 waves, a 1, 2, 3, 4, 5 impulse movement climbing up. We've received an A, a B, and a C is forming at the moment, dropping down. Basically, if it'll cross this area, I will give up this trade. But I do expect to see the euro gaining strength, expressing the strength in front of the Australian dollar as we saw just a second ago. And beside that, a cross beyond this trend line will indicate that that is a good potential for an uptrend movement. We've got a variety of potential trades, but I think the Canadian dollar is stronger than the Australian dollar, and this is why it's not the better probability in the market. I would leave it alone. The gold is reaching good potential for a downtrend movement. Stochastic climbing up, RSI at the bottom. A good potential for a downtrend movement. Wait for the cross beyond the trend line. As you can see, our strategy on several frontiers is implying that the dollar should gain strength. We see a lot of potential for crossing trend lines, corrective patterns, impulse movements. Every indication is implying the same direction. Now, the market can change its direction. It happens. But right now, the expectation, and that was my expectation for the last several weeks, according to announcement, according to the dollar index, and we will test that in a second. I said that all the time, my expectation is the dollar should gain strength because I can see the different issues in terms of economy, different issues in terms of weakness that usually add to the strength of the dollar, and that is a logical movement beyond the trend line that will pull a continuance of a downtrend. Again, we don't need the market to move a significant movement in order for us to make profit, but a logical downtrend over here should cross the $1,200, especially because of today. If we will receive good announcement on the dollar, that will cause the dollar to gain strength, that will cause the gold to lose strength, and we will see the gold continuing lower. I remind you, I said that my expectation from the gold is to reach $1,100 for an ounce, and we've got something like 1,000 pips until the $100 till this destination. Then I'll be able to go to a weekly chart, analyze the entire structure, analyze the entire formation and the expectation. Again, according to the Elite Wave analysis, we know that this is the first wave, this is the second, the third wave, the fourth dropping down. The last edge that the price can fall down to is approximately $1,000 for an ounce before it'll continue uptrend. My expectation to see a downtrend is according to structure and structure alone. I cannot predict movements using indicators, but only according to structure. That is my, you can say, weakness, and that is the expectation from the gold. I've stated that for the last several months, and as you can see, indeed, the gold continued dropping down and dropping down and dropping down, and right now it's approaching the rate that I've stated for back then. And my expectation, again, just so that you know, for the long-term analysis regarding the gold, is a drop down approximately till this area, $1,100 for an ounce, and then to climb up and to cross the $1,900 for an ounce. It'll take time, no question about that, but we can use the strength expected in our trades. Use the same method if you're analyzing charts for the long term. If you decide to analyze the gold, trend line, across, indication, everything is basically the same. All cycles are reacting the same. It just takes more time to move markets on the weekly or monthly chart. Dollar index, let's look at it. Okay, so according to the dollar index, again, I don't want to go back. We've analyzed that several times, and I've stated this and I've stated that. Basically, my assumption is that we've completed the entire one wave up and second wave down over here. That is my assumption. And since this move beyond the trend line, we've completed the 5 waves movement, implying that we began a new cycle. What I can see right now, because of because of this formation, my assumption has changed. And I think that we've made an impulse movement climbing up, and right now this entire choppy overlapping movement is forming a triangle. A simple triangle that shows us that this is a corrective pattern. Um, right now, let me take you back to this point over here. I've stated that once we'll cross this trend line, then we will see a more liquidized market, and that was the case. We saw a liquidized market, the market returned to liquidity, and even during this downtrend movement, we had liquidity. Not like this situation where the market just bounced high and low, and we knew that from the dollar index. Right now, we can see that we had liquidity which was expressed yesterday, and we've got a bit more liquidity for divergence which was expressed yesterday and today's morning. And we've got a potential for dropping down back to this line. But again, my assumption is that we will climb up and cross beyond the trend line above. That is the assumption regarding this specific chart. Because we had an impulse movement climbing up and a choppy overlapping movement dropping down, the first assumption is an uptrend potential. Now, from this image, my assumption at the moment is that the first announcement, again, I'm just combining the idea of structure and the announcement that we've got coming up. The first announcement will deliver weakness to the dollar, cause a strong pull down, and the second announcements, the group of announcements, we've got one group and the announcement at 3:30, and after that at 1:30, and after that at 3. So the first one will drop down the chart, and the second one, my expectation is that it will give strength and climb higher. That is the assumption at the moment because of the correlation regarding the gold and other currencies. We will need to wait to see what will happen and to see how to use that information. But again, we've stated several good potential trades. Several trend lines were pulled on the chart, and I do expect to see very nice potential using the same indication as we do always. From here, from Opteck, I'd like to wish you all the best with your trades. Have a pleasant day, and bye-bye.